I mean, that's a very nice way to put things in context. Mr. Sidhu, if I can sort of just stick with you for one more point, would you say that on the generation side, things are moving pretty quickly because, I mean, it's more institutional, government-led, and it's more concentrated in that sense. On the on EVs, vehicles, is the pace slower than what you'd want to see, and can it meaningfully pick up over the next couple of years?
Yeah, you're absolutely right. I mean, as I said, the three transitions are taking place in parallel, but at different phases of their evolution. I think on the generation side, solar and wind have had a much earlier head start, especially when it came down to technology cost reduction, as well as some really innovative policies that the government put in place with respect to getting sovereign quasi-sovereign entities to sort of to execute PPAs, as well as reverse auction for tariff discovery. EV is a slightly different market. It's a consumer market, and I think the government has done well. Not just the central government, but state governments have done well to give the right sort of policy signals. What needs to happen now, I think, is a financial intervention which makes it, which sort of prods or nudges lenders, be they banks or NBFCs, to extend more credit to consumers as they look to purchase vehicles, both in absolute terms as well as in terms of cost. So I think that will be a key driver when it comes to mobilizing more volumes in the EV space.
Okay, that's interesting. We have Mr. SSV Ramakumar, the Director R&D and Board Member of IOC, who joins in as well. Mr. Ramakumar, the big question really is, in this massive transition that we are seeing to new and clean energy, does India have enough infrastructure and R&D capabilities? And what do you think is needed to bridge that gap right now?
Yeah, good morning to all my fellow panelists, and very good morning. Yes, this is a very pertinent question because the canvas is extremely wider, as my previous speaker has just mentioned. Canvas starts from biofuels, which is close to the liquid fuels that we are presently using, and then it will transition to hydrogen-based fuel cells, then solar and wind. So the gap in technology, for example, if you take green hydrogen, today there is no indigenous capability to manufacture the electrolyzer, which is the key conduit for green hydrogen production. It is a different point that maybe electrolyzer pathway is not the only pathway for green hydrogen. There are many other pathways which are in the pipeline, which are being intensely researched right now all over the world, including India. For example, for India, green hydrogen pathway, if one has to realize the dream of producing green hydrogen at $2 a kg, right now it stands at $5 to $7. So if you want to bridge that gap between $2 to $5 to $7, probably some innovative pathways like biomass-based gasification is one answer, which my company, for example, is working, and we are going to set up very soon a demo unit, which we feel that is going to achieve that target. Likewise, remaining in the hydrogen, because a lot of buzz against hydrogen, and hydrogen undoubtedly is the ultimate green fuel. And if hydrogen economy is to be ushered into automobile sector, the transportation of hydrogen, the storage of hydrogen, the compression pressures, at what pressure that we have to store the hydrogen, and if we need higher compression pressures, then the materials to support this kind of storage, all this is technology gaps. And right now, though there is some indigenous research going on, there is emergent need that we need to join hands, and collectively we need to crack this. And one should not reinvent the wheel and waste the time.
Okay, that's important. So you're saying that green hydrogen currently costs $5 to $7 per kg, and to bring down the cost further, biomass-based gasification needs to be undertaken, to bridge that gap and to bring down costs and perhaps make it affordable. In that context, anything that the budget can provide in terms of either a stimulus for the sector or to, bridge this gap that you spoke about?
Yeah, because you see in this country, per annum, the surplus biomass is around 62 million metric ton surplus biomass is there. But biomass-based several energy transition campaigns are going on. For example, biomass to ethanol, biomass to compressed biogas, and biomass very soon biomass to biojet fuels, because that aviation industry is also I mean, some aviation emission norms are around the corner. By 2027, it is mandatory that we should blend ordinary ATF with some biojet to reduce the aviation emissions. This is going to be an international act. So meaning thereby that this biomass will be competed for various campaigns. So a government should have clear allocation for which pathway, which kind of biomass to be used, and biomass aggregation. Any biomass campaign, the success depends on how well we can aggregate this. So aggregation technologies and aggregation incentives for the aggregators is what one is looking for from the government side.
Mr. Ramkumar, it's good to hear that companies like you are also working hard and focused in a focused way in this space. Jal Irani is with us as well. I mean, actually, I want to get your thoughts on this renewable space, but since we have the management of IOC and we have you on air as well, Jal, just want to start with this question. I've heard from serious investors say that, well, the future for companies like IOC, BP, HP, etc. isn't, I mean, it actually is dim because of what's happening in the renewable fuel space over a long period of time. I mean, if you were to try and compute the terminal value, etc., just respond to that, since you've heard the management of IOC tell us what they are doing.
Well, I would completely differ. I would say the opportunity presented to us in terms of especially green hydrogen and renewables presents exactly the opposite, a very significant opportunity for the refineries. Why is that the case? Because you see, the largest user of hydrogen globally is refineries. And in fact, one of the fastest growing consumers in the world, because as you need to extract more and more sulfur to reduce pollution, you need more and more hydrogen. And similarly, India is the third largest user. Now, if the cost, as some of the earlier speakers also mentioned, the cost of green hydrogen is poised to fall by half to, in fact, 3/4. And hydrogen is one of the largest costs in refinery production. In Asia, for example, and we don't know the numbers for India, perhaps the gentleman can tell us what the numbers for India, but it cost in Asia $2 per barrel of oil for hydrogen. Now, if the cost in India especially is going to half, you would be saving about $1 a barrel. $1 a barrel on a GRM of about $5 is an increase in EBITDA of 20% per annum to perpetuity. Now, what that does is three things. Increases the profitability of the Indian refineries to perpetuity, and the net present value of that is significant. So that increases the valuations. The second thing it does is enhances the life of the assets, right? So that obviously is, enhanced competitiveness increases the life of the assets. So that's a good thing. And finally, all these refineries are actually quoting at ridiculously low valuations of, say, 5 to 7 times price to earnings ratio, because obviously these are considered as polluting assets, and therefore a lot of investors don't buy into it. Now, as these companies turn green, therefore you see a valuation re-rating also. So in fact, we believe that in the entire spectrum of opportunity for green hydrogen, for the refineries, it's the most immediate and most significant benefit. Yes, there could be some significant long-term gains from fuel cell hydrogen-based vehicles, which could also be very large over, let's say, the next 10 years or so. and that could be perhaps even larger. But that is not a done deal. There's a huge amount of infrastructure development which will have to go in to that sort of development. For the refineries, it's immediate and significant.
Got it. Sorry, there's a bit of a scratchy line there, Jal, so we'll have to end the conversation on that note. But gentlemen, thank you so much. This is a space that is growing rapidly, and I think, you know, it deserves a half-hour interview for another day, so we'll leave it at that and perhaps plan another one. Thanks a lot for joining us. Let's do one thing. Let's get a quick handle on what's happening in the market. Wipro, by the way, is down 5% now, so we'll talk about that in greater detail. But Mitesh Thakkar is joining in to give us some quick words at 10. Mitesh, not too bad, just consolidating this market, but what are your top stocks to watch now?
Yeah, that's right. I think, you know, it's been a sideways activity since that subdued opening, but the good thing is that, as you rightly said, not too bad. It's just holding out there. Stocks which are breaking out, IEX is something which interests me a lot. Good price and volume action there. Just a buy with a stop at 263 and a target of 282 to about 285 on the upside could be tested. And ICICI Pru, I think, you know, after a long time has come on the radar again. That's a buy with a very tight stop at 588 and a target of 605 is what I would look for.
Okay, Mitesh, thanks very much for that. We'll take a break here. We are back and we get chatting with the management of Wipro on the third quarter numbers and outlook in just a bit.